All right, let's jump right in. Today, we're diving deep into a really fascinating report that's making a bold claim. 2026 is shaping up to be a year of reckoning for the entire global economy. This isn't just another forecast. It's an analysis of how some massive, long-term trends and incredible new tech are on a collision course. So, let's get into it.
You know, the report kicks off with this quote from Ogmandino, and it's not by accident. It really sets the tone. The idea here is that the market isn't just a casino. It's a test of your patience, of your understanding. It rewards the people who see the deep currents, not just the waves on the surface.
Okay, so this is the absolute core of it, the central thesis of the whole report. You've got two giant opposing forces barreling towards each other. On one side, you have technology, especially AI, pushing prices down. That's technological deflation. But on the other side, you've got governments and geopolitical turmoil pushing prices up. That's institutional inflation. This epic clash, it's the big story for 2026.
So, here's our game plan for breaking this all down. First, we're going to look at the cold hard data setting the stage for 2026. Then, we'll get into the 5 theoretical lenses the report uses to make sense of it all. After that, we'll take a deep dive into the AI debate, walk through some specific market scenarios, and finally, we'll land on the report's big, powerful conclusion.
All right, first up, the Great Clash. And look, this isn't about pulling predictions out of thin air. The report builds its entire case on real-world stuff that's happening, on data points we can see right from the start of the year.
So, right out of the gate, we've got this huge geopolitical move. The report sees the Greenland framework as way more than a property deal. This is a strategic power play for rare earth elements. You know, the stuff that makes all our modern technology work. And by threatening tariffs, it's a clear signal that we're moving from an era of free trade to one where national security comes first. That puts a ton of pressure on alliances like NATO.
Okay, get this. $90 an ounce for silver. I mean, that's not just a little jump, that's a record-shattering price. So the report asks a really crucial question. What is going on here? What's driving silver to these incredible heights, way beyond what you'd expect from just normal inflation?
Well, the report says it's two big things. First, it's like the market is casting a vote of no confidence in government-issued currencies. And this is key. It's also about a huge surge in actual physical demand from industries building AI data centers, solar panels, and electric vehicles. This is creating a really dangerous disconnect between the paper silver traded on exchanges and the real physical stuff you can hold in your hand.
But while silver is shooting for the moon, check out what's happening in the U.S. housing market. A total deep freeze. A drop of 9.3% in pending home sales in a single month. That's a massive red flag, the biggest drop we've seen since the pandemic.
And this is where it gets really interesting. The report says this isn't just a random slump. No, it points to this well-known theory called the 18.6-year real estate cycle and suggests we're officially entering the winter phase, a long cooling-off period after years of being red hot.
So, you might be wondering, how do you connect the dots between Greenland, silver, and the housing market? Well, that brings us to Section 2, the 5 lenses. This is the intellectual toolkit the report uses. It's a framework built on the ideas of 5 really smart thinkers to create a unique way of seeing the market.
And here's the dream team. Saifuddin Ammous helps us understand assets like silver with his hard money theory. Gunter Dueck gives us a lens to see through the hype in tech. Ken Fisher offers insights into how markets think and remember. John Cassidy connects it all to the general mood of society. And of course, Edward Dewey gives us that long-term real estate cycle. Put them all together, and you've got a really powerful way to analyze things.
Let's zoom in on one of these ideas, because it's super important. Hard money. It's pretty simple, really. It refers to things like gold and silver, assets where you can't just flip a switch and create more of them. This high stock-to-flow ratio makes them a dependable place to store your wealth, especially when regular currencies are losing value to inflation. It's a critical piece of the puzzle for understanding that crazy silver price.
Okay, now for the topic everyone's talking about, artificial intelligence. The report has a fascinating take. It says the AI market in 2026 isn't one big happy family. Instead, it's a battleground. On one side, you have what it calls swarm stupidity, everyone blindly rushing into the same hyped-up ideas. And on the other, you have the lean survivor, the companies quietly building the essential foundations.
And they actually ran the numbers on this. Using a simulation model, the report predicts a huge split. You've got the AI wrappers, basically software companies that are just a thin layer on top of someone else's AI model. The model gives them a 72% chance of collapsing. But then you have the picks and shovels crowd,
the ones making the actual chips and building the infrastructure, they have a 68% probability of sustained growth. That's a massive difference.
So what does that actually mean in the real world? Who wins and who loses? Well, according to this analysis, most software-as-a-service startups and third-party AI apps are in the high-risk zone. The winners are the companies solving real physical problems, chip makers like NVIDIA and TSMC, advanced memory producers like SK Hynix, and even the companies figuring out how to power all this stuff and connect it to the internet.
So, let's move on to Section 4 and see how all this plays out across the globe. The report says there are two giant forces you have to watch. First is this idea of neo-mercantilism, which is just a fancy way of saying countries are starting to care more about their own national security than about free trade. And second, there's a global liquidity contraction, as central banks start to pull money out of the system.
This chart basically gives us a bird's-eye view of the world in 2026, according to the report. And it's a very mixed bag. The US looks like it could get stuck in stagflation. Europe and the UK are facing a potential tariff shock, and China seems to be in for a long period of stagnation. But you see those bright spots? Korea is riding a semiconductor supercycle, and Japan is at the very center of this big global money shift.
All right, let's drill down into the US market. The report's painting a pretty tough picture. The S&P 500 is expected to bounce around, trapped between a slowing economy and inflation that just won't quit. A key call is that the 10-year Treasury yield could spike above 5%. And amidst all that uncertainty, the report sets an absolutely stunning price target for silver, $120 an ounce.
But it's not all doom and gloom. Far from it. The report is actually incredibly bullish on the Korean market. And the logic is really straightforward. The AI hardware boom needs a massive amount of high-bandwidth memory, and Korean companies are the world leaders in making it. This tailwind is expected to be so strong that it could push the Kospi to new highs.
Okay, so let's pull all these threads together. What's the big takeaway from all this? That brings us to our final section, where we connect geopolitics, technology, and market cycles into one single, coherent idea for 2026.
The final punchline conclusion of this entire analysis is this: 2026 is the year of the return of the real. It's a year where the physical world, actual commodities, real infrastructure, tangible hardware, reasserts its importance over the world of pure finance and digital promises.
And this table just lays it all out, clear as day. It shows exactly what that return of the real thesis means. Look at the assets with a bullish outlook: silver, AI hardware, Korean semiconductors. They're all tied to the physical world. And what's on the bearish side? Things like US housing and European stocks, assets that are much more exposed to financial cycles and consumer mood.
And to wrap it all up, the report doesn't just give you answers. It leaves you with this really powerful question to think about. It suggests that under all the noise of the market, there are two fundamental things driving value now: scarcity and productivity. So the choice isn't just about what stock to buy, but which of these deep, real-world forces you want to align yourself with. Pretty interesting stuff to chew on.